Welcome back to Insightful Value, where we dig deep into undervalued companies that most investors overlook. Today, we're spotlighting a lesser hyped industrial player that could surprise value focused portfolios. H.B. Fuller's stock has been sliding, but that might be the exact reason value investors are quietly watching it. This review is for informational and educational purposes only, not financial advice. If you're into smart, focused analysis of overlooked stocks, hit that like button and subscribe to the channel. Let's break this down. H.B. Fuller is a global specialty adhesives manufacturer with operations in more than 30 countries. Their products are used in packaging, hygiene, construction, electronics, automotive, and more. While adhesives don't sound flashy, they're essential in hundreds of supply chains. And that consistency gives H.B. Fuller a sticky business model, literally and financially. The company has built a moat in niche adhesive solutions and tends to lock in long term relationships with large industrial clients. From a value perspective, the company's stock has dropped over the past year and is currently trading below historical averages in terms of price to earnings and enterprise value to EBITDA. This is largely due to soft demand in key end markets like construction and packaging. However, H.B. Fuller is still generating solid free cash flow, which has allowed it to reduce debt and support shareholder returns. The dividend has been growing slowly but steadily, with over 50 years of uninterrupted payments, making it a member of the elite Dividend Kings Club. In their most recent earnings report, H.B. Fuller posted a slight decline in revenue, but managed to improve margins due to operational efficiencies and strategic pricing. Gross margins are hovering around 28%, which is respectable for a chemical manufacturer. Operating margins are in the low double digits. Earnings per share came in slightly below expectations, but management reaffirmed full year guidance, signaling confidence in a second half recovery. The company is also actively paying down debt taken on from its Royal Adhesives acquisition, which improves its balance sheet flexibility. One key reason investors might be wary is exposure to cyclical industries like construction and packaging. If macroeconomic headwinds intensify, demand could weaken further. Another risk is raw material inflation, which could squeeze margins if price increases can't be passed on to customers. However, Fuller has a track record of managing these pressures through cost discipline and innovation. So, why might now be a good time to look closer? Because this is a solid cash generating company with a wide product base, a long dividend history, and a reasonable valuation. And while short term growth may be muted, long term demand for adhesives in emerging markets, electronics, and sustainable packaging remains strong. Fuller is also investing in sustainability driven products, which could provide new tailwinds in the coming years. Why might some investors stay cautious? Because short term revenue growth is still under pressure, and the company is not currently a high growth play. The question is whether you're looking for stability and long term compounders or chasing momentum. Dividends have grown modestly, around 3 to 5% annually, and the payout ratio is conservative, sitting well below 50%, suggesting room for continued increases. The yield is not extremely high, but it's dependable, especially for conservative portfolios. Will the stock recover soon? That will likely depend on broader industrial demand picking up and continued margin management. But the foundation is strong, and current prices might offer a long term entry point for patient investors. At Insightful Value, we simplify the data, cut the noise, and give you focused analysis on companies that are often overlooked. Whether you're just getting started or managing a value focused portfolio, you'll find something actionable here. More info about H.B. Fuller and many other hidden gems is available at insightfulvalue.com. If you found this video helpful, give it a thumbs up, subscribe to the channel, and don't forget to check out insightfulvalue.com for more in-depth company reviews.